Microsoft and Apple are on the heat list right now. And it's not because they're having a great day like Micron Technology and SanDisk, two companies that were the top gainers when it comes to the market today. Microsoft is down about 3.45%, and Apple is down 6.15%. And the reason behind both of these declines when it comes to their share price are related. The connection is that both companies are dealing with cost inflation, AI pressure, regulatory issues. Some areas of the tech market are just not in a good mood right now. So let's break it down. Microsoft is raising its Xbox console prices up by $150 because memory chips and other components are getting more expensive. So this sparked the sell-off. And Apple is announcing price hikes for the same reason when it comes to their MacBooks and iPads. Both companies are saying, hey, everything costs more. We're not eating the costs. We're going to pass it on to you, the consumer. And so the market doesn't like it. Apple and Microsoft are the U.S. third and fourth largest companies behind NVIDIA and Google. But we're seeing even trillion-dollar companies are being hit with inflation. So Microsoft raising those prices when it comes to Xbox is because of memory storage and those AI-related components when it comes to their gaming systems. They're becoming more expensive, squeezing the margin, leading to potential slowdown the profits related to those gaming systems. Microsoft has already been spending billions when it comes to AI, those chips, the cloud infrastructure, data centers, and Copilot, which could be great for shareholders long term, but we're feeling it in the short term. There's concerns about the cash flow. Some analysts believe that they're spending too much, and that's been creating pressure to the share price. Over the last year, Microsoft is down 28%, year to date, down 27%. So there's lots of uncertainty around this company right now, and so uncertainty leads to volatility for us, the shareholders. When it comes to Microsoft, there's also increased competition from OpenAI, Google, and Epic. They're all pushing hard, putting pressure, trying to take over Microsoft's AI advantage. So overall, there are many factors impacting the stock, having it caught up, feeling the pressure, and resulting in this share price drop. Now, back to Apple. They're going to be raising their prices when it comes to their MacBooks, iPads, and other hardware because of that same reason. Chip and storage costs are up because of the AI chip demand. So this is going to affect those premium devices. It says here that prices for the MacBook Neo, MacBook Air, iMac, and iPad models could increase by $100 to $300. There's also been delays when it comes to those Siri upgrades. Those in-app voice commands have not been working reliably. So we've been waiting impatiently for Apple to get it together when it comes to making advancements when it comes to their AI rollouts. And it just hasn't happened yet. These companies are a massive part of indices like the NASDAQ and S&P. They both close Thursday, June 25th in the red. These are just two examples that when these big companies face cost inflation, they're going to pass the cost on to us, the consumer, impacting demand, hurting those profits, slowing down the growth. So many factors leading to uncertainty, which are impacting our portfolios, whether we're these companies as individual stocks or as a part of our funds. So we have to be ready for this as investors. Even the strongest companies, even the most safe are going to be impacted sometime. These are companies that are definitely going to move the market. This is why diversification matters. Having a foundation, incorporating ETFs, baskets of stocks that can hold us up during these rough times. When those mega cap leaders like an Apple, Microsoft, of course, NVIDIA, are not having a day like Micron is after their strong earnings result. When it comes to Apple, I was recently finally up 100% when it comes to my shares, but today I'm only up 76.46%. With its recent move up to $317, Now it's down to about 275. And when it comes to Microsoft in my portfolio over at MooMoo, I'm currently down 21%. Over the last month, Microsoft had a high of $460, but the current share price is down to 352, which are both prices extremely down from its high of 555. But Microsoft is definitely one that I'm comfortable holding. I can be patient with. It's not a huge portion of my portfolio, but it's one that I understand has a backlog of work of 625 billion locked in contracts. And so in time, it's anticipated to get back to $600 a share. So thanks for watching. Make sure to like, subscribe, hit that notification bell, hype this video, and share your questions and thoughts on the upcoming price increases from Microsoft as well as Apple. Thanks for watching. Okay, bye.